Hey traders, it's Sam the Trader Geek with your Sunday, April 19th, 2026 market review and preview. It's been out of the saddle for a few weeks, thanks to tax season, but I'm back. So glad you're here with me. Spend a few minutes and we'll take a look at a little bit of history in this historic market. Maybe I should leave these videos a little bit more often. We can see it rally like we did. Let's take a look at a few time frames and what we've done. And this is just Friday we're looking at, and Bitcoin was the leader, up 2.81%. Microcaps 2.52, and the small caps 2.16, the biggest. Mid caps. So the smaller they were, the better they performed on Friday. Mid caps 1.95, Dow 1.77. Very strong day on Friday, making new all-time highs, and uh, gold was even up 1.3%. The Qs up about the same. The only thing down was the VIX and the dollar, which are generally supportive of an up market. Aggregate bonds up 37 basis points, as was the high yield bonds and the 20-year bonds. Uh, Pretty strong day for a pretty strong week. And we can see that right here where we had the Magnificent Seven up the most, 8.68%. Some outstanding moves in the Mag 7. Microcaps up 6.8, Qs up 6.18, Bitcoin almost up 6%, and the small caps 5.4. Lots of green on the screen except for the VIX. And again, the dollar both down, and the least of aggregate bonds 0.53%. And even HYG, I would have thought that they would have been up more on the week, given the strength and risk on, because high yield bonds are highly correlated to the S&P 500, 0.86%, and gold for the week up 2%. For the month of April, which we're about halfway through, and we just got through an options expiration week, Mag 7 almost up 15%. Wow. And so is Bitcoin, another risk on sign, up 14.25%. Microcaps up 13.75. NASDAQ, or the NASDAQ 100, 12.5%. And the small caps 11.2. So a strong start to the month. And VIX losing about 30% in the first half, as did the dollar losing ground. TLT eking out a small gain, and the bonds kind of staying in the green, with the gold recovering about 3.6% on the month. We're not going to look at the quarter because the quarter is the month so far. We're in the first month of the quarter, but we will look at the year-to-date VIX. Still, despite the smashing of it, is up 17% on the year, but so are the microcaps, and gold up 12.5% on the year, small caps 12%, mid caps 10%. And QQQs flipped from negative to positive on the year, up 5.5%, 5.62%. Total stock market index is your gauge, 4.5%. And Bitcoin still, despite the nice rally last week, is down almost 12%. And TLT flat on the year, as are the aggregate bonds and the high yield bonds. So Magnificent Seven just eking out 3/4 of a point gain on the year, with the dollar still ahead for the year. On Friday, if we take a look at the sectors, strongest were retailer stocks, up 3% almost, and consumer discretionary on the back of Tesla again. Amazon was kind of flat on the day. And those are the two biggest stocks in the consumer discretionary sector that really highly influence it. IoT transports making a new all-time high, up almost 2%. Industrials, tech, real estate also getting up there. Even defensive sectors like healthcare up at 1.5%, metals and mining, staples up 1.26%. So strong day overall. And unless you were energy losing 2.75%, and the utilities, sort of an energy, down 0.41%. On the week, technology leading the way, 0.2%. Discretionary up 6.6%, seeing a nice recovery in Tesla last week. And a lot of strength from Amazon. Those are again, the two that power the XLY. Transport's up 6%, retailer stocks and communications on the back of Google and Facebook. Those are the two, or uh, I should say Meta. I keep saying Facebook. Uh, Telecommunications stocks 4.42%. Energy losing 3.5%, 3.37%, and utilities losing 1.7, and materials just kind of losing a little bit, but we had staples just basically flat. Taking a look at the month and quarter of um, this year, second quarter, and the month of April so far, look at metals and mining. Can that be XME? I don't believe that. No, that's 331. No, that's better. 331.26. Okay, that's better. XLK up 16%. Sure what happened there. And XLY, we've got 10.5% transport, telecommunications, and real estate, and metals and mining. That's better than 200%. XRT and communications. At the bottom there, month to date, XLE losing 10% after making new all-time highs, and Staples just a bit flat so far. On the year, IYZ telecom stocks up 26.9%. So Cisco is part of that group, and so are some other internet stocks. And I'm wondering if Avago is part of that group. But XLE still up 23% despite the weakness last week. We've got materials up 14.4, metals and mining, industrials, and real estate. So lots of really strong sectors, with financials still down on the year, 4%, and so are more defensive healthcare stocks. So even though we've had pretty good strength in the discretionary stocks, just up a mere 84 basis points on the year. Taking a look at industrials, well, we'll just take a look at year to date and kind of fast forward here. SMH, major, the strongest major industry here, that is the chip stocks, the semiconductors, almost 29%. XOP, exploration and production, of 26, GDX, metals and mining, mining stocks, gold miners particularly, and robotics, 14.5. XBI is the biotech, which has been doing really great of late, to no benefit of the healthcare stocks. TAN being the solar stocks, ITA being the defense stocks, not the defensive ones, blockchain stocks, and entertainment. At the bottom of the list, software, despite a nice bounce, still down 18%. Pot stocks, big shocker there, down 15%. KWEB, Chinese tech stocks, just not cutting it so far. And cybersecurity stocks on software scares, down 7% on the year. You'd think with a war and what have you that the cyber stocks would be stronger. And internet stocks down 2.36%, despite the strength that we've seen in the NASDAQ, although the NASDAQ year to date is still in the single digits. So that's kind of a look back at what we've seen in the major industry sectors. Oh, we want to probably take a look at Mag 7. So last week, every one of them in the green, with Tesla leading the way, and Microsoft up 14%. Nice recovery there. Meta up 9%. Apple, the weakest of the bunch. And then if we take a look at Magnificent Seven on the quarter and the month, you can see they're all up double digits. And it would help actually if this said 2026. So not sure why That one is not adjusting. Anyway, Apple 6.48, the best of them, Meta 20%, Amazon, and these were doing the worst before I took my hiatus for uh, tax prep season. Amazon 20%, Google 18%, and Nvidia up 15.64%. So lots of green there. And year to date, we have three down and four up, and Microsoft is still down despite the impressive performance last week, 12.5%. Tesla still down 11%. Apple flat, and Amazon is the leader. And I think, and I was saying this early in the year, I think that Amazon will be the leader of the Mag 7 this year. We'll see. Google's still hot on the heels, and so is Nvidia. So getting a turnaround here earlier in March, we were seeing all of these Mag 7s in the red. So nice recovery in the market and in the Mag 7. So let's take a look at what we typically like to do, or what I like to typically do, is multiple time frames on the major indices. This is the SPX, the S&P 500 index, and we're looking at a daily, weekly, and a monthly chart. So we'll take a look at three, and without a doubt, despite all the gobbledygook here, you can see here that this has just been an incredible rally, and you have to be hiding in a cave not to know this is happening. So 12, 13 days up, we're straddling the upper Bollinger Band here. We're just inside of it, hitting all-time highs of 71.47. So what I'm thinking is we're going to get tests, and if we get tests, we'll probably come back and test this breakout level here somewhere around the 70.20, 77,000 level. I think there's a lot of underexposed and maybe still shorts out there. But what does concern me on the way up here is that just little to no backing or filling here in these rallies. And that means that we haven't gone sideways or consolidation or digestion to kind of build support for this rally. So anything that starts breaking and starts filling these gaps here is going to have a very easy time of coming in because there's a lot of, in my opinion, a lot of late longs and a lot of weak hands here that got in just because we're rallying. And so at some point, the market gods punish them. And if we take a look at what's happening now that the futures have opened on Sunday night, it's about 6:15 Eastern time. We are down about 50 points on the S&Ps and a couple hundred points on the NASDAQ, although we're way off the lows of the opening. So the bulls are at it again, buying up this dip, and I don't see any danger of a big collapse. But again, this is a lot of weak hands in here in this, especially after this gap up and continue up. So we could see a couple of gaps closed in the next week or two, if only to just kind of punish the late longs in here. But what do I know? MACD solidly positive. Can't complain about that. And look at that. We're back in the red hot area. RSI overbought at the 73 level. And unlike the oversold level where we just kind of spent a couple days there, we can spend a lot of time here in the overbought area on the daily. So above all, moving average, all-time highs, clear air. And you can see I have the mark, the implied move marked, and believe that's about 110 points for this week. Last week it was about 120 points, and there's your upper edge, and there's the lower edge. Bullish chandelier, bullish PSR. Look at this on the weekly. We have a MACD that's looking to flip back positive. RSI at the 63 level, not quite overbought, but what an incredible rally! Three solid candles to the upside on the weekly. So definitely demand there, and this is not going to go down without a fight. So, and I wouldn't be fighting it at all. So we have a PSR flipping to bullish, the chandelier flipping to bullish, and those are all positive signs. If we take a look at And let me get rid of these alerts. Don't need them. Have too many alerts on the SPX. Taking a look at the monthly chart, and look at this candle. This is power candle, taking out 2 months, all of this action here in just 1 month, and the month is not even over. So it tells you that there's strength here. MACD couldn't even flip negative on the monthly. It tried to, but here it is, and we're not done with a month yet. But we have back to overbought conditions. We're right above the 70 RSI level. We didn't spend too much time below it. And here we are, all-time highs, and that is the SPX. So NDX, not going to look too much different. Basically, if you look at it one way, this is the captain of the ship being NDX, and SPX tends to follow since about 1/3 of the SPY is technology. And you can see here we've been kind of floating right along the upper Bollinger Band and hitting new all-time highs, 26.7. MACD solidly positive. We're overbought on the RSI. Doesn't look much different than the S&Ps. And you can see here where the implied moves are marked for the next week. And those implied moves on the NDX, about 531 points, give or take, or to the upside or to the downside. And this would make it for the SPX and the NDX the third week in a row that we are outside the expected move, and the move has been to the upside. Taking a look at the weekly chart, again, three beautiful candles. Took out this trend line I drew several weeks ago, and that was last week, so I didn't have a video last week. And MACD is looking to turn positive. And look at that RSI from down at 37 all the way to 63. Nothing wrong with this. Bullish chandelier, and the PSAR is bullish. Here's the monthly chart. Again, couldn't turn the MACD negative, and we're back into the overbought area on the RSI on the monthly. So beautiful recovery. Nothing to complain about here except the fact that we are very thin to the upside, and we have some gaps to be filled, and they could be. We'll see how much the bears can muster, especially in light of the weekend news that's starting the market on the downside, but somehow or another, it could be green by Monday morning. We'll see, unless we're really going to take a rest, which I think would be a good thing, but what do I know? Looking at the Russell, the small caps, again, mirroring the other two, but doing its own thing, taking out all this downside action in a very short period of time. MACD solidly positive. And look at that. Even the Russell 2000, the small caps are overbought. They're at the 72 RSI level. And you can see here the upper edge of the expected move, and in the Russell 2000, 63 points in this particular $2,700 index. So give or take 63 points. On the weekly, another beautiful 3-week series of candles. MACD is trying to flip back positive on the weekly, and we have an RSI that's hitting 66. So we never really got to overbought, except kind of kissing it here and way back here in January, but nothing persistent on the small caps. We'll see if that changes in the coming week or weeks, given what we've seen so far. Again, some back and filling would be good for this market to catch its breath and do some consolidation. On the monthly, MACD never really threatened to flip down, so we noted that a few weeks ago, and looks solidly positive. Maybe it'll make an attempt this time to get overbought on the monthly. That would be a good sign and a change in character for the IWM if it were to do that. So solid on all three of the major index charts. And speaking of charts, if I can type, I will get you to the VIX. And here we are. from a high of about 35 up here, and we've cut that in half in no time. So we're at 17.48. MACD is definitely negative, bearish chandelier, bearish PSAR. We're looking at the daily of the VIX. Um, Obviously, we're below all the moving averages, and believe it or not, we've only been below the 200-day for a couple of days, and so that's a sign of promise for the bulls. But if we pop back up over the 200-day on the VIX for 2 consecutive days, then that'll get my attention. The weekly chart is equally bearish for the VIX, and the MACD is looking to flip negative. And I don't look much at the monthly, but here you got it. It's just been in a range for months and months and months. So if we see spikes in volatility, they're not lasting. So we got up to 35. And if you look at the VVIX, the volatility, we are out of the danger zone and in fact, under the 100 level. So it's not telling us anything that's worrisome. And as late as last, say the 13th, we were still at the 110 level. But last week we parted ways, and by Wednesday, we had closed below that all important 100 level. So VVIX is not telling us anything worrisome. Taking a look at the VIX itself, we closed at 17.48. I'll call it 17 and a half. And if we look out $1 out of the money to the 18 and a halfs, we're looking at $2.65 for the out of the money calls. And if we go to the 16 and a halfs, we're looking at about 20 cents. So this is a meaningful difference in the prices of the call. So this means that there are more there's more call buying in the VIX than the puts equidistant. And that tells me that there is a pullback in our near-term future. If I look at what's up for the next week, I got lousy spreads, so that's not going to tell me anyway. And anyway, 10 times, more than 10 times, is gets my attention and tells me that we are due, if not overdue, for some type of pullback. And I have seen this, by the way, 20 to 30 times more, but this is more than just a couple of times. And if we look at the volatility future structure, we can see that we are back in contango, which means that this is the normal structure of the VIX. The farther you go out, the higher the VIX, and we have normalized. So the VIX, or the volatility and the fear, is not here and now. The fear increases as you go out in time, as you would expect, given more time, more uncertainty. Take a look at and see, confirm that expected move, and pretty slow tonight on Thinkorswim. We've got 111 points, call it 112 points, give or take, on the week. And I would take the over on that one. I think that, when you look at last week, and let me get to the right chart, SPX. We had a 120-point move, and we've got almost 330 points last week. That was a 3 standard deviation move on just the SPX alone. So not unprecedented, but if you're counting on the expected move to handicap what's going to happen, it hasn't shown over the last few weeks. Now, if you recall, we went about 11 weeks staying inside the expected move, but the last 3 weeks have been outside the expected move, and last week to a big extent. So that efficiency and the expected move being a good tell did not apply for the last 3 weeks. Of course, that was the last 3 weeks that I was out. In any case, taking a look at what this 111 points is going to buy us, we'll take a look at our economic calendar. And we've got nothing scheduled for Monday. Tuesday, we have retail sales. That's only one that's really market mover. We do have pending home sales at 10 o'clock. Nothing on Wednesday, and our typical jobless claims on Thursday, and flash PMI. Consumer sentiment Friday. Last one was not really great, and um, given the inflation measures and the geopolitical situation. So, not a news heavy week, but as we know, the news out of the Middle East is enough volatility to last us the whole week if these economic reports don't bring it. Um, Also, we're starting to get into the heart of the first quarter earnings season, and lots of well-known companies going to hit the tape with earnings. And the most important of them are Tesla on Wednesday after the close. And we also have a bunch of Intel also after the close on Thursday. So two big names, Procter and Gamble on Friday, Halliburton before the open on Tuesday. Not a whole lot before the open on Monday, Cleveland Cliffs and Alaska Airlines after the close. Before the open on Tuesday, GE and United Health and 3M. So see some effect on the Dow and then United Airlines. So lots of well-known names hitting the tape. And this is not quite the busiest week. The next week tends to be a lot busier when we get more of the Mag 7 names reporting. But for this week, we've got Intel, of course, not a Mag 7 name, and we have Tesla, which is a Mag 7 name. So um, got to keep an eye on those earnings, especially if you own some of these stocks and you're a short-term trader. So anyway, that's all I have for you today. And what I would just say is that, um, you know, institutional buying combined with short covering is a very powerful force, but I am a little concerned that we did not have much backing and filling, and we could use a rest and a pullback, but I think that pullback will be bought. I don't see us collapsing from here, but be cautious and just keep an eye on your stops, and we'll see what happens from there. I appreciate you watching, and I hope you enjoy this. If you don't follow me yet on Twitter, it's at Trader Geek. Otherwise, I will see you next week with our next video. Take care and enjoy the rest of your weekend. Bye-bye.